Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 14th of January. Starting with the FTSE 100, which is still trying to get into the spirit of that rising 50 and 200-day line thing that's going on at the moment, around 82.10. We're also trying to break that resistance line there from last month. 82.30 on an end-of-day close basis. Obviously, we had the false break of that last week, but at least while there's no end-of-day close back below that 50-day line and below 8200 and also below the RSI 50 level versus 50.5 at the moment, we are technically in a half full rather than half empty situation for 8400. Back below the 50-day line and 8200, then it's the floor of the channel there at 8100. Moving on to the DAX, which is still trying to regroup after last month's glories. You can see that we actually had a gap higher today and still trying to get back above the 20,500 record levels there. Not a bad result, I suppose, so far, in the sense that we have had the gap up after a gap down that we had yesterday. So that's a bear trap island reversal and a positive there on a technical basis. Above 20,500, looking at the top of the channel there. 21,000 by the end of this month. Ideally, we stay above the 50-day line, currently at 19,800. In the meantime, and also stay above RSI 50. We're currently at 57, which is just about the perfect place for a potential move to the upside. On to the Dow, which is still trying to find a floor after the rather sharp losses it's had since December. Still trying to find out where the floor of the channel is there at 41,900. We were thinking it might be a little bit higher, but it looks as though this could be the level, 41,900, and that also ties in really with the November support. 41,800. Bit of bullish divergence coming in there as well, and ideally we start now on the right side of 42,000, ahead of a move up to the 50-day line there at 43,400. Moving along to Bitcoin, which has probably surprised us in both directions. We had a rug pull towards 90,000 yesterday, but very strong hammer candle, cork and water type of maneuver there, and just touching the rising 50-day line now. So it looks as though the little clear out of weak hands below 92,000 is over. We'd expect the 50-day line to be conquered over the next 24 hours, and then that resistance line there from last month at 99,000 broken, to give us a straight move towards the record 108,000. This stage only back below 92,000 risks a move down to 85,000, which was support on the way up for this market. RSI is also pushed above neutral 50, which is a positive. Moving along to gold, and here slightly upset ourselves with the failure of that resistance line there from November, but that's the reason we draw these things, so that we know exactly where we are. Current position is that we've now had a third failure towards 2750, and that means that there's a risk now of a test of the floor of the rising trend channel from back in February last year, around 2630, but that would probably be the worst we're expecting at this point. Ideally, we get away with bouncing off the 50-day line, currently falling at 2666. End of day close through 2750 could give us at least a retest of 2800 and the highest levels we've seen so far. Moving on to pound dollar, where if you don't like the government's economic policies, then we actually don't know whether it's got any economic policies, but if you don't like what they're doing, then every down day is a happy day. But so far, bit of a bouncer at $1.21, which was the old October 2023 support. So it's interesting that we haven't actually had the calamity that the mainstream media is telling us about at the moment. The reason for that might be that the RSI is now at the oversold 29 level. And of course, we have had that bounce off the old autumn 2023 support. But it's still the view, or the risk here, that below the initial 2025 support, the 123.50, we could hit the floor of that falling trend channel from back in 2020, around $1.18, even if we bounce back again. Given the lay of the land, if we really are in as bad a picture as we were back in the autumn of 22, then we should actually be towards 105 rather than 121. Moving on to the stocks, and starting off with the stock which we followed almost from the lows here, and that has been Alchemy. The very interesting V-shaped bull flags here. It looks as though somebody believes, or the market believes, that the company's going to get its money. And above the third target there, 130, looking for up to £2 basically by the end of this month. Very interesting, a sort of V-shaped turnaround there with those peaks and pullbacks, basically taking up the slack of the sharp gains that we had back in October. The other point to note is we've had multiple bounces off or above the RSI 50 level, and that tends to be a leading indicator on the upside, as is the golden cross, and as is the way that the shares have bounced above that rising 50-day line. So it really looks as though the bulls have got it in the bag. On to a stock which I don't really look at very much at all, Advanced Medical Solutions, but here, looking at it just because seems to be a bear trap rebound situation. We've got another one coming up like this later in the video, but 188 was the old low in October, and a narrow bear trap of that and then straight up, so that does suggest that we've got the bears caught out, and we could head up towards £2.50 by the end of next month, especially while we remain above the 50-day line at 206. Moving on to Sizzle, where there's been a bit of buying, and I would guess that with this company, you don't tend to get buying unless somebody is really confident, given the lay of the land that we've had here for the last couple of years. A gap higher today, and looking for the shares to remain above the 50 and 200-day lines at 1.8 pence. If they do, then we're looking for 2.9 pence at the top of that broadening triangle from back in the summer of 2023. Get that by the end of next month. As I said, we're looking or expecting some news. Hunting's next, and here we've had a clear break of neckline resistance. We've also had a sideways shuffle above a rising 50-day line and a bounce off RSI 50, so it looks as though the share should be able to at least get up to £3.84, which is the top of that falling trend channel from March last year, while they are above 320. Ideally, we stay above the floor of that gap there at £3.34, so that would be a tighter stop loss for those looking for 380 or more. On to Lexington, which had great news today with its JORC resource, rising trend channel base there since the autumn of 23 to 6 pence target there. Perhaps by the end of next month, if we can get into a groove where the 50 and 200-day lines continue to rise. They are rising at the moment, so we're going to a golden cross, and that could be delivered by the end of this month, and so could the 6 pence level. Ideally, we stay above the 50-day or the 200-day line there at just under 4 pence. On to MyHealthChecked, which had a decent announcement today. And here we've got a new type of test, which I've already forgotten the name of. But here we've got the shares very near to our first target there at 16.8 pence above that. Looking for up to 21 pence by the end of next month, especially if we can remain above recent resistance at 14 pence. You will note that both the 50 and 200-day lines are both rising, so we're going to a golden cross, and well, that's effectively a golden cross, and we've broken recent 14.5 pence resistance. So this one should go up and stay up over the next month or two. Moving along to Mila, which I look at now and again. I'm not sure whether it's Mila or Mila, but here we've got a potential broadening triangle base. We've had a few bounces for the RSI through the 50 level, and that seems to be the case now. Unfilled gap off the low as well. Looking for 0.8 pence as a very optimistic sounding target by the end of next month. Again, once again, presuming that there is some news. If you're more cautious, then I suppose you just be looking for the 200-day line, 0.53 over the course of January. Moving on to Mast, which I've covered quite a few times, and sort of nearly there in terms of turning around, but doesn't quite get there. But we have gapped through the 200-day line there at 0.18 pence, and above that looking for 0.3 pence, hopefully by the end of next month. We haven't been above that 200-day line since the end of 2023. On to Accardo, which has allegedly had its best Christmas ever. We're not quite sure what that means, but here we've got a situation where we've had a bear trap gap reversal, and above the old support there from June at basically £2.80. We're looking for the shares to at least get up to £3.20 and hit that October resistance line. Obviously, there have been many false dawns and many false sunsets in this stock, and obviously until today it looked as though the shares were just going to fall away rather painfully. The other point to note is that we've had a lower low for January, but the RSI has stayed the same as it was in December, so that is bullish divergence. And that adds to the idea that 320 should be a minimum upside here, especially while we're above the old December low there at £2.88. Moving along to a stock which I give occasional coverage to, Southern Energy, and here difficult to resist given the unfilled gaps to the downside and unfilled gaps to the upside, and a rising 50-day moving average. That suggests we can head up to the top of that broadening triangle from back in July at 11 pence by the end of next month, or even sooner, while we're above that 50-day line. But those gaps to the upside, bear trap gap reversal as well, very, very strong technical signal, and hoping that the shares will deliver the goods. Now on to the final three stocks which have blown the lights off and the doors off and everything else off as well. And you might imagine I've had plenty of adulation over these stocks, but I've actually gotten absolutely nothing at all. So maybe people expect this to happen all the time. First one is Sealand Capital, which has been a 10-bagger since November. And looking for the shares to become maybe a 12-bagger, in fact, with a move to that resistance line there. Top of that September rising trend channel at 6.5 pence as a best case scenario target while we're above the 4 pence level. Obviously, we'd like to stay above today's low at 4.5 pence if we can, but a stunning turnaround there, punctuated by the company saying that it didn't actually know why the shares are going up, which is always very satisfying. Moving on to RC365, and here we're on our third target in terms of the upside. The first one was around 2, the next one 2.5, the next one 4, which has just been hit, and above 4 on an end of day close basis, looking for 6 pence by the end of this month. And a very decent turnaround with that lovely bear trap candle there to a new low and then flipping back round again. You can see many of the days opening at the low, closing at the high or near the high as we did yesterday. So end of day close about 4 pence now, the next potential trigger. Finishing off with yesterday's hero, which very proud of as well, Trellis. And here we were looking at a chart where, in fact, I can just get a sort of close-up of the situation, but we're looking at a chart where it was bear trap rebound from below the December support there around 0.52. Shares closed at 0.6, and we were looking for the shares to get up to the top of that broadening triangle from October at 0.8. Obviously, we've slightly exceeded that by quite a large margin. If you're a fan of the shares and you were lucky enough to get involved yesterday, best case scenario here at the moment is up to 3 pence, which is the upper parallel of that October triangle, and looking for that obviously over the next day or two, especially if we can remain above resistance on the way down at 1.9. So basically 1.9 pence the line in the sand there for a move towards 3 pence. So what a great deal there with Johnson & Johnson. That's it from me today. More updates tomorrow.